What's up, everyone? It's Scotty with MoneyVest. So today we wanted to break down the Berkshire Hathaway earnings and Warren Buffett's ever-growing cash pile, which is now sitting at well over $157 billion. So we're going to break all those numbers down. They usually do report on Sundays. So I'm going to break that down and, of course, go over some of the highlights from the earnings and how 75% of the entire portfolio for Berkshire Hathaway is made up of just 5 stocks. So I hope you guys enjoyed this video and find it helpful. Make sure that you drop a like and don't forget to subscribe to the channel. Link to our Discord and Patreon is going to be down below. We'd love to have you on board as a MoneyVest member. You can get access to all the private members-only videos, intrinsic value spreadsheets, not to mention a lot of other benefits, including trade alerts, trading view charts, and early access to the MoneyVest Pro platform in 2024 as well. So link's going to be down below. I did open up a couple more spots and would love to have you on board. So first things first, let's take a look at their balance sheet, right? So cash and cash equivalents and short-term investments in U.S. Treasury bills sitting at about $126.4 billion. You add this, and we are looking at a pile of $157 billion. And take a look at the increase from same time last year, right? So December 31st, 2022, they were sitting at $92 billion in U.S. Treasuries, and now they're sitting at $126 billion. That's a 30%, more than 30% increase in just about 9 months. And, you know, the main reason for that is obviously the rates at what treasuries are paying, right? These are short-term investments, so I'm guessing these are most likely, 3 months, 6 month, 1-year treasuries that mature very, very short term because of the higher rates of 4 or 5%, right? These are very, very good rates. And this is exactly the reason I believe that eventually when the rates actually start coming down, there is going to be a liquidity of flooding into both the bond market and the equity markets as well. Because, Warren Buffett obviously is smart. He's investing in short-term treasuries, but there's a lot of investors that are sitting on short duration treasuries as well, right? I mean, there's other pension funds, endowment funds, sovereign funds, hedge funds even, that are happy with money market funds or short-term treasuries that are yielding 4 or 5%. And the moment rates start to come down, I think there's going to be a liquidity sort of flooding into the longer duration bonds, like 10, 20, 30-year bonds, as well as equities, because Warren Buffett, and this is something that he mentioned in the statement as well, there's no risk to investing in treasuries right now, right? Because it's considered risk-free. And for that reason, he's not looking to go out there and start looking for yield and take on additional risk, because 4 or 5% is very good on a 1 year, on a 6 month basis for Berkshire Hathaway, and of course the amount of capital that they have sitting on the sidelines. This right here is going to be total liabilities of about $485 billion. And I also want to mention that investments in equity securities are sitting at $318 billion. That's up from $308.793 billion. So if you do the math, 318 divided by 308, 3.2% increase in the last 9 months for the company in terms of investments in equity securities when marked to market. And this right here, of course, 75% of Warren Buffett's equity portfolio is in just 5 stocks that are going to be, of course, Apple, the biggest holding. And that's actually one of the reasons why Berkshire Hathaway reported a loss per share, even though operating earnings grew for the company. Operating earnings were well over $100 billion. Loss per share expanded because Apple stock was down over 11% in the quarter that just ended in September, right, in Q3. So $119 billion is that number. This has come down from $177 billion. American Express, the second biggest position, or actually it's still a top 5 position, but not the second biggest. Bank of America is the second biggest at $34 billion. Coca-Cola, of course, is one of the largest holdings, $25.4 billion. And Chevron, which has recently climbed up the ladder at over $30 billion. So these 5 companies are basically over 75% of Buffett's overall portfolio, right, of investments in equities. Now, Buffett's juggernaut posted a big investment loss of $24.1 billion in the third quarter, largely due to the decline in its gigantic Apple stake. Shares did drop over 11% in the third quarter for Apple, and pushing down the stake to $119 billion. That's down from $177.6 billion. And the other top 4 holdings remain unchanged. Last quarter, $22.4 billion for American Express, $34 billion for Bank of America. It's the second biggest position, $25.4 billion for Coca-Cola, and Chevron staying put at $30 billion as well. And the Chevron stake went up in its value as the energy stock gained more than 7% during the quarter amid the jump in oil prices as well. this right here, and he also mentioned that still the Oracle of Omaha advised shareholders to ignore the quarterly fluctuations because of the changes in the actual position. So they issued a statement, and I quote, the amount of investment gain or losses in any given quarter is usually meaningless and delivers figures of net earnings or losses per share that can be extremely misleading to investors who have little to no knowledge of accounting rules. So again, same concept applies to Amazon when they report earnings, losses, or gains because of Rivian's investment. Same concept applies here when they have to again realize those losses, even though they are on paper. They're not actual realized losses if Apple stock is down or higher, or any of those positions are higher or lower in any given quarter. But this right here is the main topic of conversation. $157 billion. This is a record pile for Berkshire Hathaway. You'll notice in the past it has fluctuated a little bit, right? So it was sub $50 billion back in 2007, 2008 when we did see, a lot of significant, selling pressure, the great financial crisis. But since then, during this entire bull market, we have seen nothing but the pile grow larger and larger to now over 157 billion. We did see a little bit of a dip. You can notice in 2021, 2022. And that again just goes to show that when there are deals, when there are opportunities, Buffett does put capital to work, and now it's once again increased substantially. And this does goes to show this is a good indicator as well, right? Buffett's cash pile is a great indicator to kind of help us understand, is there even any opportunity right now? Are stocks expensive or not? Because if there were deals out there, this cash pile would have been lower. But according to Buffett, on a risk-adjusted basis, when you look at treasuries and you look at other assets, there's not a lot out there that you can take advantage of right away, because why else would he be looking at $157 billion in cash, right? And if you take a look at the interest rates that are being generated on that cash pile, the interest and other income, which is darker blue, in 2023 more specifically, you'll notice has climbed up to over $1.7 billion, which is now a little bit more than the dividend income that they receive from investing in their stocks. It's kind of crazy that the dividend they're receiving from their companies that they've invested in is less than the interest earned on the cash that they have sitting on the sidelines. That's how much cash they have, and that's how much interest rates have gone up in 2023, and they've taken advantage of that. So Jim's Shananan from analysts at Edward Jones says, and I quote, rates are attractive here, and it seems like it creates a hurdle or disincentive to put cash to work if you can earn 4% risk-free. That's exactly the whole point, is there's no incentive to be investing in other assets or other riskier assets, I should say, if there is 4%, 5% on short duration bonds. And I would suspect that the cash balance probably continues to creep higher from here. And Buffett disclosed that the company repurchased $1.1 billion of stock in the quarter, down from $1.4 billion in the second quarter. However, the filing showed purchases had accelerated in August and again in September, in a sign that the billionaire investor believes shares of the company were undervalued. And of course, they've consistently done a lot of share buybacks. And this right here is the performance. They're slightly trailing behind the S&P 500, but overall, I think they have done, of course, incredibly well. The reason why they're called Oracle of Omaha, because they've consistently beaten the market in over 40, 50 years that Buffett's been doing this. Very, very strong returns. But yeah, I just wanted to break this down. 5 stocks, main ones are going to be Apple, Chevron, Coca-Cola, American Express, and of course, we've got Bank of America as well. And the cash pile continues to grow. Let me know your thoughts down in the comment section below. But the interest earned on this cash is huge, and there is thereby not a lot of incentive to be putting this cash to work, which I think that's kind of like the mindset of a lot of institutional investors, hedge funds, pension funds, endowment funds. When rates are so high, rates that we haven't seen in over 16, 17 years, especially on the short end of the curve, and you're looking at, treasuries that are sitting at, over 4 or 5%. There's a very little incentive, and that's exactly why the risk premiums have diminished significantly over the last few months and over the last couple of quarters. As I mentioned before, the risk premium, which is the premium that you earn in return for taking on additional risk, has gone down. Okay, and that's a big sort of a let off for a lot of investors, and thereby their equities are having a hard time sort of finding a solid ground to rally. Of course, last week we saw a very nice, massive move to the upside on the back of treasury yields falling, and that inverse correlation might continue, in my opinion, over the next couple of weeks if treasuries continue to come down. That's going to create a very interesting dynamic for liquidity flooding back into riskier assets, and thereby equities seeing some more momentum. So I hope you guys enjoyed this video. Wanted to quickly break down Buffett's earnings and the statements. Let me know your comments down below. As always, make sure that you drop a like, subscribe to the channel. Link to our Discord, Patreon is going to be down below if you're interested in joining us, and of course getting access to everything. And as always, happy investing, and I'll see you all in the next video.